Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, May 26th. Welcome back from the long weekend. Basically, tonight we're going to talk about the SPY and the E-mini, of course, and the beatdown they took today. We're going to talk about crude oil, similar beatdown and sympathy for the most part. We'll talk about gold, how that got whacked early in the morning today. Bonds took off higher, and the U.S. dollar took off higher, and we'll talk about where the resistance point is there. So let's go right into the charts and get into all the action that we had today. So here's a daily chart of the SPY, and you can see where we cut through the 211.20 area that we had this line in here, which was pretty good support, and it was only intraday support, and I'll show you in a minute how we fought that a little bit today, and then it just couldn't hold. But we didn't get to the second level of support, which is interesting, and then at the end of the day, we kind of bounced up a little bit, and some folks might read that as we hit a bottom, and I don't. I think there's probably more downside coming this week. I mean, we really should get to at least this level here at 209 and 3/4, 209.75, maybe 209.50, probably pierce through the 50-period moving average maybe. And even this one down here, which is a new level of support that I found, 208.62, 208.50 may be the number, but I put it in at 208.62, which is on the number. And then down here at 207. And, anything goes tomorrow, but the reason why I say I think there's more downside is when you basically have one of these rolling tops here, and then you have a big down red candle or big down day, and you took out 1, 2, 3, 4, 5, 6, 7 days of upward or sideways momentum, that to me is meaningful. It's always been meaningful to me. It's very rare that the market will just ignore that and just continue up. I think that there's more shakeout to be had, and we're going to see what happens over the next day or so. But certainly, we probably I thought we would see more back and forth action, before the Memorial Day holiday. But all in all, we went basically up into the Memorial Day holiday. And then on Friday, I made it a point to give you 3 specific cycles that I thought they were converging between Saturday and Monday and today. And that turned out to work out as if that was important. So I think that was important. Now the question is, can we find the bottoming cycles? And I think I have it. And I'm expecting the market to bottom either this week or maybe as late as early into next week. But I think we're going to see a market bottom here and another leg higher, kind of a bottom. One of these, and I've showed you this. Let me move that back down. I've showed you this before where, we see an A and then or an A and then a B and then a C. So you can consider the A the rally up, a B pullback, and then a C another leg higher. So to me, that's what I'm expecting right now. And we'll have to take it one day at a time. But tomorrow, because today was such a wide range day in terms of a down day, tomorrow don't be surprised to see more of a narrow day, and then maybe some more selling on Thursday. We'll see what happens. But anything goes. There's really no way to tell exactly what tomorrow brings at this point. But we'll see. So let's talk a little bit for a second about the transports, because I thought what was interesting was I heard on CNBC they were discussing the quote-unquote death cross in the transports. A death cross is where the 50-period moving average crosses over the 200-period moving average, yada, 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 or 50 or 20-period crosses over this, that, and the other thing. I don't really know what it is. I don't really care what it is. All I know is I'm looking for a low here in the transports, and the pundits on TV are looking for a sell signal. I mean, it's just mind-boggling, isn't it? We're not looking for... the sell signal was up here. Okay, when we made a lower high, that's a sell signal. Another lower high, another lower high, a lower high, a lower high. These are sell signals. This isn't a sell signal down here. We're getting to the buy signal. My downside target was 83.15. I've had that in here for 2 weeks probably. I don't know. But, you know, so forget what they say on TV, but I thought it was interesting just to make mention of. It was worth mentioning anyway. It's just funny more than anything else. The IWM had a nice down day today, but if you'll notice, the IWM made its low pretty early in the day, and then it grinded higher all day. So that's actually a bullish sign. Speaking of which, I didn't show you the intraday S&P. Let me show you the 10-minute. This is that 211.20 that we had in here, and you can see where the market came into it, fought it for about half an hour, maybe 40 minutes. Okay, we touched the underside of it on this candle, broke down, said, well, let's try it one more time, pierced through it, couldn't hold, sold off. So that tells you that line is important, that number is important. When you spend, 30, 40 minutes here, try it again, miss it by a couple of pennies or pierce it by a couple of pennies and then sell off, the line's important. There's no doubt about it. That is was a support, now is a resistance point. Okay, there's no doubt about it. So let's go over to the IWM, but you can see where we bottomed today a lot earlier in the IWM than we did in the Spider. And that's usually a tell that that's a strong signal in the market. It's a bullish sign. So it's something to take note. We don't know whether it's going to be bullish or bearish for tomorrow, but it's a bullish sign. We've got other factors that are bearish. The IYT or that's the ETF for the transports, or the transports themselves, the DJT. Now, I think they're bottoming here probably within the next 20 or 30 points, maybe a little more, maybe 35 points. But we got down to 83.40 today. My downside was 83.15. That's where you start looking for the low to occur, and you look for a bottoming signal. So let's go back to the transports for a second. And what are we looking for? So on the daily chart, okay, if you were looking for a bottoming signal, the same in any market, what we're looking for is some kind of a reversal pattern, some kind of a high volume low finish on the high, some kind of doji candle with volume, probably a pierce through 83.15, and then a reversal would be the ideal scenario we'd be looking for in the transport. So that's kind of everything I have in the markets today. Back to the Spider. We're looking for, we didn't even see 210 today. We're probably going to see lower prices, but the market generally will try and fake us out once or twice, and that's kind of maybe what happened at the end of the day. But keep your eye on the IWM. If that remains strong, I would look for bullish signs in the market as well. Gold got whacked today. That's the GLD. Let's go to the actual gold itself, and you can see how important this 1205, 1206 area was. We couldn't get above that today, pierced through it, and then just collapsed away from it. So you can tell the market came back into the 205, 206, hovered, couldn't do it, sold off. Let's go zoom out and see what we have on a longer term picture in the gold market. Okay, had another level at 1197, and that didn't hold. So we're at 1186. The next thing I really do have is double bottom, and I don't know that we get there. So I don't have anything definitive. I don't have anything definitive to say here's the next move in gold. It's just a market that's been tough to trade. It goes up, it goes down. I mean, we hit this number, and then we just really rocket it off. There's some symmetry here. This down move, sideways down move, is about equidistant. So could we find a low in here with some support? Yeah, but I don't have anything telling me that's there. Got to see the market trade and see it, what it's going to do. Look at the hourly chart. I mean, this is bearish. We're big down candle. We're just going sideways. We could see another leg down in gold. We just have to see it play out. I don't have anything to tell us one thing or the other is going to happen. I actually thought we'd see higher prices into early this week, and we've seen the opposite. So the same energy that I thought would bring the market higher is now bringing the market lower. So we'll have to just reevaluate, see where we go. Oil. Oil is its own animal. We're still in the middle of the channel that we've drawn in here. Down move, up move, down move. There's nothing going on. We're still in the middle of the channel. Remember, I told you if we start getting to the lower end of this channel towards the 50-period moving average, I'm going to start to get interested in looking for an oil trade based on how it gets there and what it's doing and all that stuff. So I'm going to keep you in the loop on that. But until that happens, or we get to the top end of the channel, or we develop a pattern that's going to tell me it's going one way or the other, it's really a no trade. So it's in the middle of the range, and I'm looking for the bottom end of the range for a bounce. So that's the nearest term trade I can see. TLT, bond market, just a monster rally today, right? Unbelievable. So I was looking for a close above this day here, right, which was at 120.43, and I'm saying we didn't get it here. We closed at where was the close? 120.35. Here we closed at 120.40. I'm waiting for 120.43, and what happens today? We're up $2. Unbelievable. Just a big time rally, big sell-off in yields. Flight to safety. Money gets sucked out of the stock market and went into the bond market today. Doesn't happen all the time, but it does happen a lot, and that was the case today. So they were pushing bond yields down, bond prices higher, but this is temporary, and we may go higher. We may have put in somewhat of a multi-week low here, down here. I mean, look at this. Look how good that level was. I didn't take this trade, but I should have. I didn't think it was, I wasn't sure, I wasn't positive it was going to hold. Sometimes I know my levels are good and I have 100% certainty they're going to work out. Not that they work out 100% of the time, but this one, I didn't feel it, so I didn't take it. But what a good level that was. That was just spectacular. And now we're right up into the 50-period moving average on the weekly chart, so I wouldn't be surprised to see a pause for a couple days. We'll see what happens, see how the market unfolds, and see what it's going to do. At this point, I would say that 200-period moving average, so another dollar and a half higher is in the cards, but we'll wait for the next couple of days to play out. But this was a great level. Too bad I didn't take that trade. 118.21. The low was 118.13. That was just rock on. Okay, let's go to, we did gold. We didn't do the dollar. The dollar was just a monster today also. But I have a good level in the dollar where I think it's headed, okay? I'm even going to show it to you. I'm going to show you exactly where I get this level from, okay? We're going to go to, you know what? I'm going to go back to the daily, and let's go and go to a high. It's going to be a little rough, okay? It's going to be a little rough. Let's get the exact high. Let's get the number. 100.785, okay? 100.785. If I can change that in there. Oh, that's on the number. Great. And the low was 93.50, right? 93.18. No. The low was 93.5, low 93.17. All right, so 93.17 is the low. Why did I think it was? Isn't that weird? 93.15, 93.17, 93.15. Whoa, had a little brain teaser on that one. 93.15. Okay, 93.15, 93.15. Boy, I'm not doing well with the dollar here today. Okay, here we go. So where I think it's going, $98. 618 retrace, 97.87. All this chart support here. Look at this. Look at this battle that went on. The market fought that level so many times. That was support. Now it's going to be resistance. 618, 97.87. Call it $98. Taking it out. That's a secret level. $98 is your target on the upside on the U.S. dollar. Should work out. Should actually should act as a magnet, and it should draw price to that level, and then we should stall out at that level. Now, what happens after that is going to be important. Do we go sideways from that and build up somewhat of a pressure cooker for more upside, or is that the exhaustion move, and do we again sell off? And remember, I was saying last week that I'm not convinced that the lows are in the dollar. Well, now with the move today, we'll have to see if we consolidate right underneath 98 and for let's say a couple of weeks, then we may be poised for another higher move, and then this would prove to be the low. So we have to see what happens. We have to see what the reaction is off of 98, and I think we're going to get there this week. Tomorrow, Wednesday, Thursday, whatever it is, and then we'll see how 98 shakes out and what happens from there, and that'll determine what we do next. So, just a little bit of a recap. Let's go back to the spider. Recap: three cycles converged between Saturday, Monday, and today. It seemed to play out, or it did play out. We've got some downside. Market bounce at the end of the day. I think there's more downside coming. We're looking for 209.74. Probably pierce through it. Probably really realistically 209.50 if the market's selling on any kind of volume, and that would be your next target on the downside. If we reverse, okay, you're going to see some resistance at 211.20. But I should tell you that in the middle of the day today, and I don't know how many of you out there are aware of what's called fake prints, but as I was staring at the 10-minute chart on the SPY, I got a fake print all the way up to 212.90. What was it? 212. You know what? I don't remember now. Actually, if I go to the 10-minute chart, I can tell you. Yeah, I guess it was 212.92, which is filling this gap. And I'm just sitting here, and what a fake print is, for those of you that don't know, is it's actually when the market shoots up for a second. Okay, all of a sudden you have a candle that rockets up, went up to 212.92, stayed there for like half a second, and then drops back down like it never happened. And then there's this long tail that stays in there on the 10-minute chart, probably for 10 or 15 minutes. I don't know how long it stayed there. It just disappears eventually. And it's called a fake print. I don't really know what it is other than somebody's putting in an order that was once in the system. They're re-putting it in, and I don't know what significance it has other than, maybe it's kind of like a tip-off. Hey, check out the 212.92. This is a number that we're targeting tomorrow or Thursday or Friday or this afternoon or whatever it is. And the only reason I bring it up is because I've seen a lot of them play out, specifically of late, not the same day, not necessarily the next day, but they do play out. So write this down, 212.92, and let's track it and see what happens. Fake print, SPY, 212.92. Got that at about, I don't know, like 2:30 in the afternoon today. So thought I'd make mention of it. And fill the gap. It's going to fill the gap if that takes place. Speaking of fill the gaps, I am developing a short lesson, and it's going to be a complimentary lesson on gap trading, and I think it's an untapped gold mine. And for those of you that are interested in it, you're going to really, really enjoy it. I'm writing it. I don't know when it'll be done, but it'll be done, and I want to get it out as soon as possible. There's going to be a short written piece, and then there's going to be a video that goes through a number of charts with a number of gaps and why they filled, why they didn't, how to make money trading gaps, where to find the gaps, where to find the trades that are going to produce gaps, all that stuff. I'm going to give you the whole ball of wax, because what I'm realizing is the very thing that I use each and every morning in this market and have for years and years and years, most people really just don't know about it, and they don't know how to take advantage of the inefficiencies and the gap trading in the markets that go on each and every day. And I think it's worth talking about. It's worth giving it to you. It's worth showing you, because you can make money on it, really a lot of money on it. So it's really my bread and butter on a daily basis. All the other stuff is secondary to the gap trading. So I'm going to give you everything I got in gaps, and hopefully you'll make some money doing it. So with that, I'm going to leave it there and sign off for tonight. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.